It's July 19th. JLD here, and welcome to MSTR today. We've got a lot of great MSTR content coming your way, so we'll dive right in. Just remember, this video is not financial advice. Please do hit that like button, and let's get rocking. All right. I don't know what you're doing this weekend, but Michael Saylor wants us to know that he is working this weekend. And let me tell you, he's working on something pretty sweet. He's always cooking up something. I always love to say, let Michael Saylor cook. I mean, I literally go to bed with a smile on my face every night because I know that Michael Saylor is cooking. He is working. He is thinking. He is continuing to move the ball forward for strategy, for MSTR shareholders, for you, for me, for Strike, for Strife, for Stride, for all the things that are coming up in the future. It's an exciting time, and I am so glad to be on Team MSTR. Speaking of which, Strategy wants us to know that our treasury ranks 9th versus S&P 500 companies. Look at this, a $71 billion treasury. Insanity. I mean, 9th of every company, ahead of Exxon, ahead of NVIDIA, ahead of PayPal, ahead of CVS. Insane times. And Michael Saylor just wants us to know that what is that? That's bullseye. Every single time, literally every single time. Man, I really like these shades. I would buy those shades. They should sell these strategy shades because they look good. Bullseye every time. Jeff wants us to know that there were 3 now companies that hold Bitcoin in the S&P 500. Eventually, the Bitcoin 100, the Bitcoin 250, and the Bitcoin 500, of course, meaning that every single company is eventually going to be holding Bitcoin that's in the S&P 500. Because if you're not, you'll be irrelevant and you won't be in the S&P 500. Simple end of story. So who was that company? Block, which is XYZ. And what happened to them? Oh, just a little 10.68 jump in the after hours when they announced that. Absolutely amazing stuff. Congratulations to Block, just again paving the way for other companies like Strategy to be included into the S&P 500 sooner than later. Chris says, listen, fiat incentivizes you to spend, Bitcoin incentivizes you to save, strategy incentivizes you to invest. Do you understand? And I say yes, because I save in Bitcoin as well as in Strife. And I invest in strategy, aka MSTR. Jeff says, relentlessly strive for Bitcoin. I will never stop, Jeff, striving for Bitcoin. I will never stop striving for MSTR, striving for Strike, Strife, and Stride. Let's go. Brandon says, Bitcoin is a bet on the dollar losing its value. There's a 100% chance the dollar loses its value. Do you like free money? The answer, Brandon, is yes. I like free money. And this is just like a visual example of everything going to zero against Bitcoin, you know, the dollar, the real estate funds, gold, of course, the S&P 500, oil, Berkshire, Euro, Apple, Visa, NVIDIA, silver, Coca-Cola, NASDAQ, the price of Bitcoin in a Big Mac, the price of Bitcoin in a house, the price of eggs in Bitcoin, the cost of an iPhone in Bitcoin, the US dollar, Tesla, everything is going to zero against Bitcoin. It's just a matter of time. So true. And I have some great video clips of Michael Saylor. So let's dive on in.
I know wealthy people, they own 16 estates on the Eastern Shore and they live in 2 of them. Like, why do they buy them? They land banking. What does that mean? Well, the guy makes a lot of money every year and he doesn't want to put it in a savings account. So he goes and he just buys a cool piece of property and he buys another one. Well, okay, it sounds good, but here's the problem. The guy buys up the beautiful pieces of property and so you can't afford it. And if the rich guy wasn't buying up all the beautiful houses, they would cost half as much. And you could live in a beautiful house. So here's what happens. Some rich dude has 27 houses that are empty. You don't have a beautiful house. You have a family. Your kids, your dog could use the beautiful house. The rich dude doesn't even want the house. He just wants a long-term capital preservation strategy, right? And so that's a perverse incentive and a distorted economy. That's broken. That's broken money. That's because the rich dude is using an estate on the eastern shore of Maryland as a piggy bank. Yep. Huh? But the estate doesn't get renovated. The house is falling down. There's a beautiful pool on the water, and you could have a great family picnic there every Sunday, but it's not going to happen because the rich dude has 16 other houses. He just bought that house because he thought it was a good investment. 6 months have been tremendous. All of the fundamental planets have aligned. Bitcoin's been acknowledged as the one digital commodity in the world by the administration. The banking regulators have given a green light to bank Bitcoin. The accountants have upgraded the accounting to fair value accounting. There's been a surge of Bitcoin treasury companies. There's like 100 public companies or more that are holding Bitcoin on their balance sheet, and every single week there's another announcement. I think that it used to be we're focused on the halvings, but at this point, the entire natural supply of Bitcoin is only 450 Bitcoin available for sale every day. That's sort of about $45-50 million a day at this level. That is all being consumed by the Bitcoin treasury companies, and the Bitcoin ETFs are coming on strong. So I'm very bullish. My forecast in July of last year in Nashville was Bitcoin's going to appreciate 29% a year on average for the next 21 years. And that moves it from, it was about mid 60, 65,000 to 13 million a coin in the year 2045. I'm getting more bullish on that forecast, but I'm certainly comfortable forecasting 30% a year ARR on average for the next 20 years. I think Bitcoin's up 57% a year for the past 4.5 years. Again, that's double the Mag 7. That's quadruple the S&P. That's 8 times real estate, and bonds are down 4%. So Bitcoin is smashing everything, Joe.
When it comes to my assets, diversification is key. I don't want to be over leveraged in any one thing. I mean, yes, I own MSTR and it makes up a large part of my portfolio, but I also own Bitcoin and always will. And now, thanks to my new sponsor, BitIRA, you can own Bitcoin in a tax-sheltered retirement account. BitIRA has been around for almost 10 years. As one of the trailblazers in alternative IRAs for crypto, they have built the world's most secure digital IRA. Here's why you'll love them. End-to-end insurance, highly secure storage, multi-encryption, and registered with the US government. And it's fully IRS compliant. If you have a 401k from an old employer or an IRA gathering dust and you'd rather have that retirement account converted to an IRA in Bitcoin, BitIRA will help you convert it free of taxes or penalties. Best of all, you can trade crypto within your retirement account without taxes incurred on any buys or sells. Just go to bitira.com/JLD and request a free info guide. Once you do that and open your IRA, you'll get a free ledger. Again, that's bitira.com/JLD to open a tax-sheltered IRA in Bitcoin.
I wouldn't do asset-backed borrowing. I wouldn't pledge my Bitcoin for a loan. So most of those other forms of leverage I would skip unless you had a really good reason. I think that the ideal strategy for a Bitcoin treasury company is, first, you build a bunch of Bitcoin equity as much as you can. And then when you get to a certain scale, you issue a convertible preferred equity like Strike. And then you issue a senior fixed preferred like Strife. And then maybe you issue a junior fixed preferred like Stride. I'm not going to say that all three of our securities are perfect, but they're pretty good. And they're the three most successful preferred equities in the century, like for 30 years. If you look around, you won't find a more successful preferred set of stocks in a decade or decades. So you would be going to top 1% just to copy them. So Probably I would copy them. Why? Because if you copy them, then the investors already know how ours performed, and investors don't like to take unquantifiable novel new risk. Right? We've already blazed the trail. You're basically giving them what looks to be, I'm not going to say it's a sure thing because every single issuer is a different counterparty with different counterparty risks and different circumstances at different points in time. But what you are doing is giving them an understandable thing, like this is like Strike, or this is like Strife, or this is like Stride. So I think that's fairly straightforward. I think the issue is, an investment grade preferred, probably you ought to be targeting like a BTC rating of 10. And I think a convertible preferred, you ought to be targeting 5 or better. For a junk preferred, you could probably go to 3. Might even go to 2 or 3, depending upon the volatility of Bitcoin at the time that you issue the junk preferred. But that's what I'd be thinking. And of course, the limiting factor to all this is how much Bitcoin you have. So if you've got $1 billion of Bitcoin, you could probably create $100 million worth of investment grade Bitcoin credit. And you're going to be capped at that, right? If you have $10 billion of Bitcoin, you could create $1 billion of investment grade Bitcoin credit.
And there you have it, another episode of MSTR today. Here's my buy order from yesterday, a 0.481 share of MSTR. I bought it at $438 before it took its little dump. So is life. And I will keep buying every single trading day of 2025, period. End of story. $210. Lock it in. Let's go. And hey, it's inevitable that we have the ups. It's inevitable that we have the downs. Volatility is vitality. Volatility is that feature. It is not a bug. Keep the faith, my friends, and we will be rewarded. And like Michael Saylor loves to say, there is no second best.
What's the second best? There is no second best.